Hey everybody, welcome back to Pathways to Wealth. I'm excited in this interview to introduce you to Tys Crandall, who's the founder of CreditSuite.com, where he helps business owners, both new kind of startup founders and experienced business owners, develop business credit and get lines of credit for their business. So, you can have credit cards and other types of lines of credit and raise financing, not personally guaranteeing it. It's basically on your business. And there's a process that people need to go through to make that happen. And that's what he does. And he talks about how he built that business, that consulting business, and how he's helped thousands of people raise a lot of money. And in the interview, he talks about how a new entrepreneur or a new business can raise about $50,000 in about the first 6 months of going into business. He also talks about the 3 different types of financing that you can get. We talk a little bit about angel investing and venture capital funding and, maybe who might be right for business credit and who might not be right for that. And we also talk about, how Tys built that business and how he transitioned from mortgages into this new space. So enjoy this. I think you're going to really like it and get a lot of value from it. So without further ado, here's Tys. Hey, everybody. Welcome back to Pathways to Wealth. I'm excited for this interview with Tys Crandall, who is an international speaker, author, and credit expert. And, Tys, I'll just kind of pass it over to you, man. What should everybody know about you?
Man, that's an open-ended question. I've spent about 17 years in the financial space. So what my real passion is helping entrepreneurs get money, to be as simple as possible, to be able to help business owners get the credit, the financing, the capital they need to really be successful in business.
Cool. So I know we were just speaking before we hit record. You started off in the Air Force and then you went into the finance realm, or how did that work?
I did. I was from a really small town in Indiana, and I needed to get out of the town. So I joined the Air Force, and they literally stationed me an hour and 50 minutes from my town. So that strategy failed miserably. And but I was a medic. I loved medicine, and I stayed in it for a while. And then I kind of ventured into sales, and I realized how much money was in the sales side, which led me into finance. And I've spent about 17 years in the finance sector now, and I love it. I love dealing with money. I love the idea of capitalism. But now I'm really in an awesome position, man, because I get to help entrepreneurs, which is my other passion, is just anything to do with business. I'm one of those guys where I hear people talk about what they do, and I'm like, I want to do that. No, I want to do that. So it's really pretty cool, man. I get to help entrepreneurs get money. I couldn't think of something better in life that I could get to do.
Nice. Now you're the CEO and founder of Credit Suite, right?
Right. Yeah.
All right. Let's talk a little bit about that. What is that company? What do you guys do?
Well, what we do is, primarily we do 2 things. We help companies build business credit. So we help the entrepreneurs build credit for their EIN number that's not linked to their personal social. So it separates their credit profile, separates their liability. And then we also help them with all different types of financing. So what we find is that, most business owners just don't really have any idea where to go to get money. Most think they're going to go to their bank, but about 98% of business financing comes from alternative lenders. So what we really do is consult with clients and help bring to them all the financing they can get through all legitimate different sources and products that are out there, versus just the kind of stuff they'd find at a conventional bank.
So give me like a typical client of yours. What industry are they in? How much are they raising? Are they making money? Is it a startup, pre-revenue? Is it physical business, online business? Like what's kind of, I guess, your bread and butter or your typical client?
Check to everything you just said. Seriously, we try hard to narrow down our demographic of our end customer, and we have so many industries that it's hard to do. But real estate, for example, is a good example. We deal with a lot of people investing in real estate because that's a sector that has a real tough time walking into a bank and getting a conventional bank loan. But yet there's several different types of financing that we can provide them. And through business credit, we can actually help them obtain large amounts of money to purchase real estate, regardless of being in what lending space kind of calls a high risk industry. So that's a perfect example right there.
Okay, cool. So I'm in the angel space. So here in Austin, Texas, we deal with a lot of convertible note, debt,
Sure.
People starting off with debt or raising like seed rounds or A rounds from
Right.
angels, and then maybe even VCs. Like how does your type of credit, I guess, differ from like your your typical like convertible note round?
Sure. Well, we deal with both. We don't deal as much on the equity side. So you're referring to a lot of things that are venture capital where people are basically exchanging equity in their business for actual financing. We deal a lot more on the debt side. So we help people obtain all different kinds of actual business loans. When it comes to corporate credit and business credit building, that's really similar to your credit profile. So you have a credit profile linked to your social. With business credit, we're basically creating a credit profile that's linked to the EIN number, and then they're able to use that to obtain large amounts of credit in the business. So one of the biggest differentiators between that and regular debt financing is that most debt financing has a personal guarantee involved, unless you're coming in with considerable collateral, which a lot of entrepreneurs don't have. And in our world, we're building credit profiles and helping them obtain substantial amounts of financing through their EIN, where they're not personally liable for what takes place in the business. They're not personally guaranteeing that debt.
Gotcha. So what does it take to get to that point where, say somebody's like, okay, I have a business idea. I started a business. Maybe I'm making money. Maybe I'm not. What does it take to actually like realistically raise capital or to get debt financing?
Well, not a lot. I mean, it's just kind of the same as consumer credit. It's if you get a few accounts that report, they give you a credit profile, you get a credit score, you use that to springboard off of and get more. The more you get, the higher the limits they are, the higher limit accounts you get, the more credit you can get that mimic those limits. Business credit fundamentally is the exact same. So, somebody can make sure that their business is set up credibly, where they have a real business address and a business phone number, or virtual address and phone number, for example. Once they take those steps, then they can start getting vendor credit right away. Usually offers like net 30 terms, not the kind of preferred money that somebody would want. But again, that's what's used to create the profile and score. And then from that point, within about 60 days, they're able to walk into a Dell, a Home Depot, a Staples, a Lowe's, an Amazon, a Walmart, and start obtaining real store credit. And then it takes about 10 accounts total reported, or about 4 months total time to start getting to real cash credit, which are, $10,000 to $50,000 credit cards, credit lines that work just like a normal Visa card, MasterCard, but again, don't require business or don't require personal guarantee. So usually in about 4 to 6 months, they can get multiple $10,000 plus credit limit lines and cards without the personal guarantee.
Gotcha. So you start small, you prove you can pay your bills on time, and then you build from there, and then you build it, and there's no personal guarantee. The risk is on the business.
Right. And what's nice is that, businesses have an appetite for much more capacity than an individual does. So, the business credit world, you're talking about getting a Dell account with a $10,000 limit in about 2 to 3 months total time. So that's that's completely unheard of in the consumer world, because, why would you ever need, $10,000 at Dell for personal computers? But again, business has a greater capacity or use for money. So as a result, you usually see, SBA, I think, is pretty accurate where they say that limits on business credit accounts are about 10 to 100 times higher than consumer credit. So it's fast to build, and the limits are substantially higher than what we're all accustomed to in the consumer world, the personal side.
Cool. So how'd you get into this industry, or how'd you found Credit Suite?
Man, it was kind of a crazy story. I mean, I owned a mortgage company when it was the first business I ever owned. And I got into it when the getting was good, right? When mortgages were at their peak. And I'm like, man, running a business is like so easy. This is so simple. Because it was easy at the time until it wasn't. Yeah. And then the crash came around, and I was very well prepared, had tons of money available, tons of credit available. And I mean, literally within, overnight, we didn't have the ability to make money anymore. Our job was to help people get loans, and banks stopped basically lending money. So it really was an eye opener. And the result was pretty much the complete demise of the business. And then because I personally guaranteed everything, I didn't know any better, then that really carried over and wiped me out personally. So I got into the credit improvement space. We were helping people fix their credit anyways as part of the mortgage business. I thought that would be the next big thing because, people's credit was trashed after all this happened. And
this was after the real estate meltdown?
Yeah, 2007, 2008 time frame. And we did really well. We helped our clients just see massive improvement on the consumer credit side. So many of our clients started to ask us, well, hey, look, I own a business too. What can you do to help us about business credit? And I wasn't really familiar with business credit. So I started to look into it, and I was blown away. I couldn't find any information on it. There weren't companies offering it. There weren't no companies promoting it. There weren't weren't people talking about it. You had to dig really, really, really deep to even learn what it was, let alone the steps to go about obtaining it. And the more I learned, the more really upset, frustrated, and angry I got that, this existed. And, I'd been in business. I'd owned multiple businesses here. I knew a lot about financing and I knew nothing about it. And I assumed that your average person didn't know anything either. And it was really frustrating to me that, business owners, I'd self-funded my businesses, and here was an ability to get money right off the bat, high limit accounts, separate your liability. It was like an entrepreneur's dream, and nobody was talking about it. So I kind of decided in that moment that I was going to become the advocate in this space, and I started promoting it. I figured it out. I started offering it as a service, and I was just amazed at how many people jumped in. They wanted to learn more. I started building this massive tribe right away. And, it really taught me something about business, that it shouldn't be difficult. In the credit improvement space, it was very difficult because people didn't want what I had. They wanted the good credit profile. They wanted the result, but they didn't want the actual product being sold. And when I got into business credit, I realized how open people were to it. They loved the idea of getting money. They loved the idea of getting credit. And I just realized that in business, it kind of works or it doesn't work. It's either really well received and you're really satisfying a need and a want, or you're not. And I was blessed to have found that niche. And since then, since we've been in the space since 2012, we just dominated the business credit space. Whether you go to YouTube or wherever you're looking, you're going to run into us out there. And we've just been able to help literally thousands of people obtain credit and financing. So it's just been extremely rewarding ever since.
Nice. So how many clients do you have?
At any given time, we keep about 2,000 active clients. So in about 12-month time, we've built their business credit. So they don't really need us anymore involved once they get past the business credit profile, the business credit scores, the vendor accounts, the store accounts, then they're the cash credit accounts. So in about 12 months, our clients kind of rotate out because we've performed our services. So at any given time, we're maintaining about 2,000 active clients.
Nice. That's healthy volume. So what's the process like whenever you work with somebody? Are you actually helping them set this stuff up? Is it a course or a hand-holding thing? What does that look like?
We kind of deal with all aspects of it. So, we'll work with somebody, and the first thing we do is help them set up all aspects of their business credibly. And for some businesses, that's just a matter of that are established, checking off things or bringing things to their attention they didn't know. Such as something simple, like if you're not listed with 411, that really limits your ability to start building business credit. Then there's other ones that are just getting started in business, and we're helping them with all aspects from getting their entity established and choosing entities without personal liability, all the way through to helping them get their phone number, their website, all aspects of that. So we help them with the first stages of getting credible, and then we help them with all aspects of obtaining vendor credit, store credit, and cash credit. We kind of do it through an online system we call the Business Finance Suite, which is a cloud-based service where they log right into our system, and through videos, they're guided through the exact steps. And then we have business advisors that are calling out, reaching out to them, and also receiving incoming calls, helping them with all aspects of that, all the way to a full-blown service where we'll do most of that work for the client so they don't actually have to do it. So kind of all aspects, whether they're wanting to do it yourself, work with our coaching team, or even have it done for them, we have services in all three of those areas.
Nice. I like the idea of, having the information available and you can do it on your own, or full service for somebody that doesn't want to do anything and just, pass it off. What's kind of a realistic window of what somebody could raise within, say, 6 months? What do you kind of see as the average there?
It's hard to say. And I kind of bounce that question back to consumer credit. It's like asking, how much credit can you get in 6 months? It's almost kind of limited. It really depends on unlimited. It depends on how much you're applying for ultimately. And that's what we find with our clients. Nobody ever maxes out. They don't try to. They're trying to get a certain amount of credit that they want to apply for or use for their business. But when it comes to cash funding, it's very practical for somebody to get about $50,000 in financing within about a 6-month time period, including vendor credit, store credit, cash credit. Within about a 12-month time period, that's usually $150,000. And then when the 12 to 24-month time period, that's when you can easily get up into $250,000 or more. Again, that's not a ceiling. That's just typical of what we see with what people want to apply for and are actually applying for and what they obtain.
Nice. So what was the biggest challenge in like somebody getting business credit? What's something that pretty much everybody runs into?
In our world, it's taking action. And that's what we see as the biggest barrier is that, we're surprised at how many people pay to come in and then don't take the steps they need to take along the way to actually obtain success. And that's still mind blowing to me. So I think that's the biggest barrier people have is just taking action. And I understand it. As an entrepreneur, we tend to kind of put off what we're not familiar with or what we think might take a little bit more work. So I think that the idea and the concept of getting money is very attractive to people. But I think sometimes when it comes to just doing a little bit of the work that's involved, people kind of hesitate. I think that holds them from getting results faster than they should.
Gotcha. And is there any reason that like that people would get denied for credit? Are there certain industries that are more challenging, or is there something that people need to do first before getting set up?
Sure. I mean, there's all types of things that will get people denied. I mean, primarily the biggest reasons for denial we see is that people don't make sure they have a credible business first. They're applying with a home phone number. They're applying with a home address. They don't have a website up. They don't have anything that resembles them being a credible business. And then they're trying to get credit right away. The other big issue we see is that people put their social security number on the applications. When you're building business credit, you don't supply your social. If you really wanted your business name, you need to leave the social off the application. But, we're conditioned for that. We don't understand that, is we're used to seeing a social security number on an application for credit and thinking that has to be completed. So we see that before people find us as a barrier and an obstacle that they face. And the biggest problem we see with building business credit is that they apply for credit in the wrong order. And this, a lot of cases comes before they get to us. So they're trying to go in their bank and get a Visa card in their EIN name or their EIN number, and they don't even have any credit established. And, you can't walk into Walmart or Staples, your bank, and get credit right away if you have no consumer credit established already. It's no different in the business world. In order to get to bank credit, in order to get to real revolving store credit, you have to have some kind of profile and score initially established. And a lot of people try to skip that step and go right to the stores and right to the banks. They get denied, or they put their social on the app, get denied because their credit's bad on the personal side, and they pull personal credit, and then they think that it doesn't work. But if you follow the proper steps, leave the social off, get the vendor credit to store credit to cash credit, that's really how you overcome those obstacles and, find success.
Great. That's awesome, man. So it seems pretty straightforward. I mean, I've never, I've actually had several businesses and I've never gotten business credit before. What would be like a good reason that somebody should raise or I guess just acquire debt? Are these like cash flow businesses or primarily real estate, or like, is there a specific reason that people would need this type of capital, or is it just kind of like everybody should have some kind of credit?
Well, I'll give you an example. I mean, Walmart is the biggest retailer in the world. And what most people don't realize is that Walmart, basically 80% of Walmart sells is paid for before they buy it. So what Walmart does is they use credit to obtain what they put on the shelves. You go in as a consumer, you buy what's on the shelves, they take your money and use it to pay off the credit. It's the reason they're the number one retailer in the world. It's OPM, it's other people's money. So in business and personal, I'm all about avoiding debt. But in business, the master companies are good at using other people's money to grow. Apple's sitting on $200 billion in cash. They still borrow money for these exact same reasons. So every large publicly owned, every large privately owned company has got there because they use other people's money to grow. They borrow money and use that to fuel their business. So every, startup should really follow the same philosophies. I'm not saying debt is bad, but using other people's money to grow is the alternative to using profits to grow. And those are the alternatives you really have. Is what are you going to do? You're going to grow organically and use your profits to pay yourself and to pay for the growth of the business, which is slow and stagnant in most cases, or you get good at proving your business model. You use other people's money to inject cash without actually giving up equity, and then use that to fuel the business. So the bottom line is, if you have capital or don't, it's just a it just decides how fast you're going to grow. You can easily grow 5, 10, 50, 100 times faster when you've got capital and you've got a proven model versus sitting on a proven model and waiting for more money to come in and slowly starting to invest more money in the business and having more slow, stagnant growth. So in my opinion, everybody should have access to money, not to mention that that's the number one reason businesses fail. I mean, most businesses do fail. And per SBA or any source or authority on this, it all comes down to they don't have money. They get into trying to run a business. As well as I do, nothing ever goes as planned when you run a business. You think you've got a great plan. It never works out like you think. You have all these unexpected things come up. It takes you longer to be able to be successful. And then because people run into hiccups in the road, they go out of business. I was reading something yesterday on Twitter. Twitter right now has enough cash on hand that they can afford to lose money as they are for 412 years and still be okay.
Wow.
We can't do that. Most entrepreneurs cannot go more than, 412 days or much less than that, making mistakes and losing money before they're out of business. So we just don't have that availability. Most of us have to prove the model and get it working right away and start making money. And having capital on hand is there to help you in cases where you kind of fall down, you need to get yourself raised up, or you're kind of perfecting your model to see what works.
Yeah, I love that. One thing, you just kind of sparked an idea. So I have a venture capital buddy here in Austin that we're talking about either manufacturing or licensing a product that we have in development right now. And we're going to have to source it from China. And I was like, if we license it, there's not going to be any financing issues or any, manufacturing issues because somebody's going to take care of that. But if we have to go and actually source, manufacturing on all this, we're going to probably need like $1 million or $2 million. And at that point, the question is, what do? Do you just put out cash or do you raise capital? Do you see is raising this kind of business credit, is that viable for say somebody who is starting, creating a product or creating an entity from scratch that is going to be needed for manufacturing? That's what the capital is going to be needed for.
Sure. I think it's a combination of things. I think you have to kind of look at the level you're talking about. For example, if somebody's raising $1 million, $2 million, it takes you considerable time to do it with business credit alone. So I think the effective strategy is to look at threefold. I think you look at an equity investor for part of it. I think you look at, debt financing. There's a lot of different kind of business loans and financing that are available as well, including private money that's not VC, and you use a combination of business credit. And that's what we commonly see, whether it be manufacturing or many other sectors, is that people come to us and they say, look, I need $100,000. I need $1 million. And they can't get it because they're trying to get it from one source. And for one source to let go of $1 million, that's not an easy request. But at the same time, we can bring them in and get them business credit, get them unsecured financing, get them private money, get them venture capital, and then we can get the $1 million plus by bringing in a lot of different sources, a lot of different avenues into one. And that's what I see on the consumer side. It's like a mortgage. Everybody wants more than they can afford to get. And I think that's what happens in business. I think a lot of people are looking for more money than they can get in one source. The key is to use multiple sources, multiple products to be able to help them get that financing.
Yeah, that makes a lot of sense. I mean, I can definitely see where a startup founder would say, okay, well, let me try to raise some money from friends and family. And then let me try to talk to some angels while maybe building the business credit and while getting some revolving lines. And yeah, I like that. Hit it from multiple angles because, one source might take a lot longer. It might take longer to get commitments from angels than it will to get, a smaller revolving line to get your seed money so you can start doing business.
Sure. Yeah. And I mean, business credit is the fundamental base for anybody getting financing as well. I mean, if you're going to try to get debt financing from any kind of lending institution, even cash advances from a place like On Deck, they all pull business credit. And the business credit's what's used to determine the approval amongst other factors. So any kind of conventional financing, if you don't have good consumer, business, and bank credit, you're not going to get financing. And most people don't realize that. They neglect the business credit. Then they try to go out and get the larger amounts of money and they fail and they don't understand why. Well, the reason why you're failing is because business credit's public information, I mean, anybody can obtain it. It's not like your personal credit. I can't go get your personal credit right now, but literally within 5 minutes, I can pull your business credit. I can know everything about your business. So if I'm pulling business credit from a company that's has no credit established or has a $10,000 high line and they're looking for, 250,000, well, there's no way. I mean, they've never shown the ability to maintain that kind of financing in the past. So business credit's really crucial. It's not just a matter of getting the credit to use a credit. It's that's the basis of decision if somebody's going to buy your company, if you're looking for outside investors, if you're looking to get money from a lender, your prospects, your clients, your competitors, anybody can obtain this information. So there's just a multitude of reasons why you want to focus on that, as well as these other avenues to get financing.
Nice. So what's one piece of advice that you would give to an entrepreneur or a startup founder that, they're looking to get business credit? What's kind of step one?
Well, I think the first thing you have to do with business credit, I mean, my first advice is to do it as quickly as possible. You have to be wise and understand that in business, you have to expect the unexpected. Even as a startup, you could do it. And then I kind of already touched on my best advice. Make sure you don't put your social security number on the application. Make sure you make sure your business is set up credibly, and then walk through to the next step of getting vendor credit at places like Uline and Quill and Lachlan and Associates and Monopolize Your Marketplace. They'll give you starter credit if you have none, and they report to the business reporting agencies. Once you have 5 accounts, don't even think about applying for store credit till you have 5 accounts. Once you do, then start getting store credit. Go to Amazon, go to Best Buy. Almost all major retail stores offer business credit. Tell them you want a business credit card, but leave the social off the app. No matter what they tell you, make them push through the application without the social. And then don't even think about getting the Visa, MasterCard cash credit until you have 10 accounts reporting to Experian or Dunn and Bradstreet, or a combination of both. And I think if you follow those steps in that advice, then anybody can really be successful.
Nice. That's great. I mean, you got to start somewhere. And I think that's a good kickoff for anybody that's looking to just get the ball rolling. So a few kind of fast questions here. What are you in the camp that says you should focus all your attention on one thing and focus on one source of income and kind of build everything and give it all you have? Or are you in the other camp that says that you should diversify and create multiple sources of income?
I live in the camp of one thing. I dream of the camp of multiple.
I like that. So you're practical over here. You're like, yeah, I got to build this one thing, but eventually maybe build multiple.
I love to do multiple things, and I try. What happens is I have a lot of opportunities to take part and get ownership of certain businesses and contribute. But at this point, I commit so much time into what we're building, and what we're building is not only big, but it has the potential of really being massive. So I just kind of feel that I'm constantly drawn back in, because this is the best chance for me to get financially where I want to be, to true wealth, to retire, to be able to build a really successful company and sell it. So I kind of try to venture off, and I look into real estate and these other things that take my time away from my main venture. And then no matter what happens, I seem to circle back and come back around, because again, this is the best potential I have of getting me where I want to go. So I think I will end up doing multiple, and that's my goal. My goal is to build what I'm building now and eventually sell this. And then, down the road, be able to have the time and the finances to do multiple things. Right now, as appealing as that is, I find myself drawn back to the demands of what I'm working on. And I kind of succumb to that, because what I'm working on, I know, is the best, easiest, fastest way for me to get where I want to be.
Yeah, I think you hit the nail on the head. I mean, if you're building a company, if you have a vision of either getting bought out or going public or something like that, like I feel like that's a venture that really requires like all of your time. And if you try to diversify, it's kind of like you're not going to master anything, right? You're just going to kind of be mediocre in all of them. And so what I like to do is kind of partner with different people. Like I'm not a boots on the ground real estate guy, but I like to cut checks and invest in stuff. So
yeah, sure.
Yeah, I think it's, like you said, I mean, just focusing on what's going to give you the biggest payoff.
To me, it's focus, and that's the thing, is it's not even a matter of the time, it's about a matter of mental commitment. I'm a very deep person where I spend a lot of time thinking and strategizing and planning next steps. And I've tried to do that with multiple ventures, and it's very tough for me. It's very tough for me to shut off one venture and go to the next and go all in with thinking and strategizing and planning. So what I found is that right now where I am, I just don't provide enough value in those other areas when I try to split my focus and take it away from my primary task at hand. So I will be probably within 5 years where I'm diversifying a lot more on what you're describing. But right now, my hardcore focus is right where I am and what I'm working on right now.
Nice. Do you have a book that you would say is required reading for entrepreneurs?
I love a book called Maximum Achievement by Brian Tracy, because I really think it's all about mindset. I'm of this camp where I truly 100% believe that what you spend your time focusing on literally will become your reality. I come from this belief that your subconscious cannot differentiate between reality and the reality you paint in your mind. And I'm very big on visualizing where I'm going to be and letting kind of the universe then give me what I need to help get there. And that's worked very well for me in my life. So that book really, it didn't adapt. It's not where I adapted a lot of these beliefs, but it really touches on and it provided validity to a lot of the beliefs that I have in that area. So I think that's phenomenal when it comes to mindset of building a business and being a successful entrepreneur.
Beautiful. That's one that I haven't read yet, so I'm going to order that. I usually, anytime somebody makes a recommendation of a book that I haven't read, I'll just do the Amazon one click. It's so easy, and then it like shows up in 2 days.
I'm big on Audible, man. I do Audible 3 times the speed is what I do. And I can make it through because I do a lot of reading as well, but I'm in more situations where I can listen and learn than I am in situations where I can read and learn. So I try to do both, but I find that about 3/4 of my time when it comes to bringing in new knowledge comes from Audible, from listening. But I'm surprised because saw a statistic the other day. It said like 65% of people never pick up a book after high school. And that's mind blowing,
crazy, man. It's believable, but it's insane.
It is. Like I read, like it's not uncommon for me to read 3 to 10 books sometimes in a month, and I'm just obsessed with the idea that you can learn whatever you want to learn. We were talking before we started that I fly for fun. And part of the reason I'm a pilot is because that's interesting. I cannot believe that like you're telling me I can just go learn to do this and then I can do it. So to me in this life, that's just an amazing thing that you can openly obtain as much knowledge as you can.
Yeah. And a lot of the smartest people in history have pretty much brain dumped everything they know into nice little packages. Why would you not want to consume that?
Right. It's awesome. It's mind blowing. Yeah. So I really enjoy that. I just enjoy the ability to be able to get better. Yeah. I just think that's a cool thing.
Awesome, man. Well, that's kind of a good lead into the next question, which is, do you have a favorite quote or a mantra that you live your life by?
Probably not. I have a lot of favorite quotes, but a mantra I live by is that knowledge really is worthless unless you apply it. And that's not a quote or probably word for word the way I should put it out there, but I think it's one thing to obtain knowledge. I'm a really big implementer. I'm a very big action taker because I learn a lot of cool things. But if you don't take action and implement, then it doesn't really do anything for you.
Mm-hmm. Yeah, there's a lot of smart people that haven't done much with their lives, right? There's a lot of like book smart people, but I agree with you. I mean, it's all about taking action. It's all about like every day working towards your life mission or whatever your big goals are.
Yeah. I'm very big on that. I think that life and success all comes down to the actions you take and what you implement versus just what you know. Because like you said, a lot of people know a lot of stuff, but if you don't take action and implement that and put that into your business or your personal life, your day to day, then it really just doesn't have a lot of meaning.
Yeah. Ty, what does true wealth mean to you?
Wealth to me, it's funny because my 6-year-old son asked me this question the other day. What is rich? He said, what is being rich? And I said, well, first we have to talk about interest, then we have to talk about a job, and we have this very long discussion through it where I tried to talk him into being an entrepreneur, and somehow out of the conversation he walked away and goes, okay, well, I think I'm going to be a doctor then. I'm like, where did you get that? Let's start over. But true wealth to me is when you make enough money and interest where you don't have to work anymore, to be able to support your life. And coming from, and don't get me wrong, I mean, wealth isn't just money. Wealth is a lot of things in life. But coming from an environment where I had a lot and lost it, safety and security is most important to me, I found in my life. So when I look at wealth, it's having enough money where I don't need to work, where myself and my family has that safety and security. But of course, again, that goes a lot deeper, right? I mean, my kids are what I value the most, my family, and a lot of that ties into overall wealth. It's not just having money, it's having great. I mean, I have a great personal life. I have hobbies that I love. I get to spend tremendous amounts of time with my family, which is awesome. I spend a lot of time working from home. So I've been around my kids to watch them grow up, been able to provide and give them a great education. And I think as a parent, you want to teach have your kids have everything you didn't have. And to me, all of that really, ties into true wealth.
Yeah. And I like how you aren't afraid to say, like, look, money is important, having that security, because you've been there, you've had a lot, and you've also lost that money. And I don't think I told you this, but I was also in the mortgage business in Tampa in the early 2000s.
That's cool. We probably came across each other's path at somehow.
Probably, man. Yeah. I mean, I was in high school, when the refi boom was kicking off, and same thing. I was like, holy shit, this business is awesome. You mean I can make tens of thousands of dollars without really trying? And then like the housing boom. And it was interesting to see. But I agree that financial security is really, really important, because, money's not going to make you happy in and of itself. But if you're a happy person, it's going to make you happier, and it's going to make you feel more secure.
Yeah, you can't deny that it fuels most of those things. Whether you're into material things, whether you're into charity, it's money that fuels it all. So, when you have that part kind of checked off the list and out of the way, then I think you focus on the things that really make you happy. But it's much easier when you have the money because, like I said, it ultimately fuels everything. Whether it's not what you really want, it's at least a driver to help you get what you want, whether it be material things, whether it be more time with your family, which is important to me, whether it be, giving to charities, which all require, the money to support it. So I think it starts there for me to be able to have the things I really want, which is time with my family. To me, that's what's most important. My dad worked hard, man. My dad worked really, really hard. And I'm so indebted to him for the life he gave us because of his hard work, but he wasn't around. He worked at 7 a.m. to 8 p.m. And I saw that and I just said, there's no way. I want to have the money and what he's given us, but I need to spend time with my family. And I'm really blessed to have a life now where I can do that, where I can kind of have my cake and eat it too. I get to do what I love, and I have plenty of time to spend with my family. And that is the most important thing in life, is to be able to have as much time with them as I possibly can get.
Absolutely. Time's the only asset that's ever depleting, and you can't buy more of it. But
yeah.
Awesome. All right, Ty. Well, thanks, man. Did you have any final words of wisdom or advice for any new entrepreneurs or investors to get started, or anything around business credit, or any lessons that you've learned through building your business?
Yeah, a couple different ones. First of all, expect the unexpected and be prepared. Build business credit from early on, because even if you're a startup and you have bad personal credit, you don't have collateral and cash flow, which means you're not lendable in most cases. You could still build business credit. And know there's a lot of financing out there available. The problem right now has nothing to do with a lack of money or a lack of people that want to lend money. It has to do more with entrepreneurs not knowing where to go to get that money. So if you're looking for money, it's available. You just need to be around smart people like yourself that know where and how to get the money, and make sure that you put yourself in front of those people, because the money's available. It's just a matter of knowing where to go to get it. And if you don't know, there's plenty of people out there that can help you get that access.
Nice. Ty, where can people reach out to you?
Our main website is creditsuite.com. That's Credit Suite, which is SUITE.com. And then we've got a great free guide there too, which is creditsuite.com/EIN that maps out the steps in depth of how to build business credit.
Cool. Well, we'll go ahead and link all that up, and appreciate you being on the show, man. I really appreciate you dropping knowledge about credit. And, you know, I know there's an entrepreneur out there somewhere going, I need credit for inventory or for this or for that. And hopefully this lights a spark to get them started. So
Well, I appreciate the opportunity to share. I had a lot of fun.
awesome. Thanks, man. I'll talk to you soon.
Sounds good. Thanks.